What is going on, investors? Hopefully guys are doing well out there. I wanted to join you today for a quick video. So many people have been asking me, when is the stock market going to bottom? When is the signal going to be there? What are the technical signals that I'm looking at? Folks, we are on the doorstep of something significant here. This is confirmed by looking at multiple sectors. We're talking about nearly a dozen sectors are flashing all the same thing. Let me explain in today's video. I want to start with a chart of the XLE. This is the energy ETF. This is essentially oil and gas, but essentially energy. As you know, over the past year, this thing has just been continuing to rocket up. As oil prices and energy prices continue to rocket up, what has that done to inflation? Well, it's kept inflation continuing to go up as well. As inflation has ticked up, that has caused the Federal Reserve here in the United States, really across the board, to have to start raising interest rates. As the Federal Reserve raises interest rates to tamp down inflation, that typically causes an economic slowdown, an economic contraction, sometimes a recession, but more often than not, it causes stock prices and equity values to decline. We've seen that across the board, from blue chip stocks to cryptocurrencies. They've all come down. Now, XLE is the exception to that. It's obviously been, as I represent here in a green line, a really strong uptrend. Well, what do you notice? We are actually touching that line. So what does that mean from a technical perspective? If we are to break through with a red candle sometime in the coming weeks, well, guess what that will do to inflation expectations? As inflation expectations start to walk back, we might get a pivot or a more dovish Federal Reserve that certainly will benefit equity prices. Now, the opposite could happen in the coming weeks ahead. Energy just bounces off this level exactly like it's had over the past 6 or 7 months, and it bounces higher. That certainly will impact equity prices as well, probably to the negative. Now, this is all supported by virtually every sector of the economy that we're looking at. First chart that I have up here is the SMH. This is the Semiconductor ETF. You see, illustrated by this downward channel. I bet you have a lot of stocks that are making this formation. The SMH has been locked in a downtrend since the beginning of the year. Well, what are we doing? We are now setting up towards the top of this trend. Notice we've done that several times over the last 6 months. And what has happened? Red candles start to materialize and these markets go down. So if this technical pattern holds true, we would expect probably as soon as next week that the markets hit the brakes at these levels and start to reverse. The upside, though, folks, is if we get something different. This is why I'm recording this video on Thursday, to let you know heading into the weekend, if we see a reversal in stocks, we should see incredible momentum on the SMH, at least in the shorter term. We're seeing this across the board. Here's the XLI. This is the industrial ETF. This looks almost identical to the SMH ETF of semiconductors. We are in a fairly steep downward channel with this one. And guess what? Yes, we're sitting up right at the top of that. If this downward channel is to hold true, we should expect red candles heading into next week with this, and the XLI to go down. What we are looking for from a technical perspective is actually something different. A break to the upside certainly will be different there. Now, here's the XLF. This is the financials. This is the banks. This is JP Morgan. This is Bank of America. This is all the major banks here in the United States, also locked in a downtrend. Where are we? At the top of this trend. We are expecting heading into next week and the coming weeks ahead that this trend will continue. But guess what? If it does not, that will certainly signal something different from a technical perspective and set up a lot of ways to make money. Here's the XRT. This is the retail ETF. Again, just like all the other sectors that we're looking at, locked in a downtrend, but sitting right there at the top. The VNQ, which is real estate. I would actually contend that this trend is probably more like this. So you could argue, some technicians might even argue, that this one has broken out of trend. The other way to look at it is at least is sitting towards the upper end of a trend line. Real estate might have already broken out. If real estate reads the rest of these markets, we could be heading to the upside. Here's consumer staples, a little bit shallower of a trend. Some would argue that's the trend, and we've broken out on consumer staples, and it looks like, to me, this is like totally wanting to roll over and head to the downside. If consumer staples is any indicator, that one looks like it wants to pull back. That could lead the rest of the markets down as long as energy continues to head up, that is likely the call. Now, consumer discretionary also looks like the rest, but with higher deviations, higher fluctuations, higher volatility. This is your Teslas. This is your Amazon. You'd expect wider swings in this one. Guess where we're setting up in discretionary? Right at the top of the channel. If you break out above the top of this channel, boy, momentum would send you much higher. Again, all the algorithms, all the computer trading is looking at all the exact same stuff we are, especially when all of the sectors are setting up like this. Now, the material sector had a big, gigantic downtrend. It even skipped some price action. You'd expect some kind of dead cat bounce in this sector. You are seeing this one. This one probably has even more room to run. It could easily run up into the $80 per share. There'd be another $5 run on the XLI before I'd see any clear resistance on that one. We also are looking at the XLV. This is the healthcare ETF. This sector has held up very nicely. This is really the only significant buying that I've done this year is in the healthcare sector. We've been buying it on this sideways chop. Some of you might be wondering, where's the individual tickers I'm buying? I am buying the XLV. I do not buy individual healthcare stocks. The other one is the IBB. I called this out in a video several weeks ago. Many of you jumped in and left notes in my comments, so I'm glad some of you are making money watching this channel. We were buying this at 106, 109. It's here at 125. This one is also still setting up in a pretty large downtrend. You get another break to the upside. I said this one could comfortably get back to 160 and still be looking pretty good from a technical perspective in an upward channel. I like that one. And now finally, probably the ultimate confirmation is the SPY. This is obviously the S&P 500 ETF that the vast majority of people trade or invest in. And look at that. You're setting up towards the top of the channel. So some of you might be wondering, what are the scenarios heading into Friday, heading into next week? Well, you've got earnings next week. You've got Apple, you've got Google, you've got Microsoft, you've got the entire market producing earnings next week. That certainly will weigh heavy on the markets. Those stocks, those companies report positive earnings, positive guidance, positive things. Well, you could break to the upside on the S&P 500 and, in my opinion, probably retest this cluster of highs that we made back in May and June up here over $410 on the SPY. That's another $10, $12 higher. Stronger momentum should get you up into the $420 range. If you make this move, there are shorter term trades here. There will be a lot of technical traders that come in and play this breakout. This is one of the easier trades, in my opinion, is you play the breakout momentum trade. You set your stop loss very close to this level and you just simply trade the momentum to the upside, making sure you hit trailing stops on the way up. Again, this is a shorter term trade. If you were a longer term investor, I wouldn't necessarily buy this candle. If you're close to retirement, or let's say you're saving up for a house, or you're going to use this money that you have invested in the SPY or any of these different sectors, you're going to need it in the shorter term for bills or anything. Quite frankly, I would sell these rips higher. The longer term focused investor, you could be dollar cost averaging all the way down on this. If you have a 10, 20, 30 year time horizons, no one's going to tell you that that is a mistake. Me personally, I will sell some positions if we get this kind of follow through next week in a rally, but I'll be much more willing to buy the pullback, which I think would absolutely be coming if you have this type of rally on the SPY. There'll be the realization, if you have this type of rally on the SPY, that the Federal Reserve will have the cover and the clearance to maybe keep rates a little higher, a little longer. That should keep equity valuations tamped down to a certain degree, but I would be much more willing to buy the pullback on this one because technically we will have broken out of this downtrend. Now, we've done it before back in March, but this was so early on that it's a little more expected. Later on in the cycle, it's far more interesting to buy those pullbacks and buy those dips. Now, again, the opposite could materialize, and quite frankly, I think we'll see it at the end of next week after we have all the major companies report. Maybe what ends up happening is they all put up stinkers and the SPY, like all of these sectors, continues in this downward trend line. Well, as we pull back, we'd expect to retest the lows that we made on any of these sectors, including the SPYs, back at about 365 on the SPY. I would be also more willing to step in there and buy these lows, understanding this technical pattern is still in place. We are likely to have more relief rallies in the future, maybe potentially to take profits there. But we are on the doorstep. We are watching the XLE very closely. Will the upward trend on the XLE just continue like clockwork, or will this one technically fall apart, break below trend, which would likely trigger a lowering of inflation expectations, which also could signal a Fed pivot? That is what we are watching in the markets at these hours. Let me know down in the comments what you are watching. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.